Did you know that the student housing market and traditional multifamily properties, while different, can actually complement each other in ways that enhance overall property management success? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy Mackay. Let's get right to it. In today's segment, we're diving into the world of student housing and multifamily properties, exploring how these two distinct markets can inform and elevate each other. Recently, Denial Doyle from Management Diaries sat down with Joe McDiffitt, the managing director of property management at Coastal Ridge Real Estate, to discuss his integrated approach to managing a diverse portfolio. McDiffitt emphasizes that managing student housing and traditional multifamily properties requires a strong framework and adaptability. People live where we work. It can be a messy concept, but also a beautiful concept, he says. This highlights the importance of understanding residents and being responsive to changes. One of the key strategies McDiffitt shares is the importance of not siloing different property types. By deploying resources where needed and being attentive to the leasing cycles of each property type, teams can avoid being overwhelmed and unprepared. Despite the differences between these two markets, they can share strategies and best practices to benefit both. Some highlights from McDiffitt's insights include understanding key operational differences between student housing and traditional multifamily, applying data from multifamily portfolios to improve student housing performance, and aligning pre-leasing cycles with on-site teams for smooth execution during peak periods. Moreover, McDiffitt stresses where it makes sense to share resources across property types to improve efficiency. It's not just about managing properties, it's about building relationships, seeking mentorship, and maintaining discipline to succeed in the industry. In other news, MCB Real Estate, a well-known real estate development and management firm headquartered in Baltimore, has recently made headlines with its strategic acquisition of a multifamily community in Columbus, Ohio. Partnering with Abide Capital Group, MCB acquired the Harlow on Main complex for $16.5 million. This acquisition marks a significant move for both companies as they expand their footprint in the multifamily market. The Harlow on Main is a 120-unit complex located at 195 East Main Street in Columbus. It was recently sold by Homestead Companies and, at the time of the transaction, was more than 86% leased. The financing for this project was provided by WesBanco, showcasing the confidence financial institutions have in the project's potential. Built in 2020, Harlow on Main is a Class A, mixed-use asset situated near some of Columbus's major employers, academic institutions, and cultural amenities. The development features studio and one-bedroom units averaging 483 square feet, with modern amenities such as 9-foot ceilings, island kitchens, and wood-style plank flooring. Select units even offer private balconies. The ground floor of Harlow on Main includes approximately 7,000 square feet of retail space, which is partly occupied by the Cafe Kawa House. This integration of residential and retail spaces aligns with the growing trend of creating vibrant, mixed-use communities that cater to diverse needs. David Bramble, managing partner and co-founder of MCB Real Estate, expressed enthusiasm about the acquisition, stating that Harlow on Main is an institutional quality and best-in-class asset that seamlessly fits with their portfolio standards. He highlighted the robust performance of the multifamily asset class and the promising economic metrics in the Columbus region as key factors in their investment decision. This acquisition also marks the inaugural joint venture between MCB and Abide Capital Group, led by founder Derek Hawthorne and managing partner Kyle Smith. Abide Capital Group primarily focuses on acquiring and developing rental housing in communities across the Midwest and Southeast, making this partnership a strategic alignment for both parties. With this acquisition, MCB Real Estate continues to demonstrate its commitment to strategic growth and investment in high-quality multifamily assets. It will be interesting to see how this move impacts their future endeavors in the real estate market. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy Mackay. See you on the next one.